All righty. And yeah, and actually on the break, I got some really good news from Eric too, which I'll share shortly. Okay, so all right, let me just check the questions and stuff here. Trading daily time frame and looking for a roll on smaller time frames. If you see 30-minute go positive, the 1 minute could roll negative in that time frame. Is that an issue? Okay, good question. No, it's not. So let's think about that. Let's look. That's a great question, and it leads into this next one. But let me. I'm going to make a note here. All right. So daily chart. 30-minute goes positive, so you get in. Then the 1 minute goes negative. Is that a concern? No. We'll talk about why, and then also what is a concern in that situation. Oh, nice, Jim. Okay, that'll be cool. You don't use headphones. Just blast it really loud in the plane. Yeah, and also keep in mind. Well, yeah, we'll talk. We're gonna spend a lot of time talking about setups too, and so yeah, we'll definitely be getting into that more. What do you think about splitting out the best EMA to another separate indicator? I'm not sure I totally understand that question. Al, JC, to see all the time frames available on the indicator so you can see the rolling, is it best to put the indicator on a 1 minute chart? And yes, so yeah, I'll show you how I have them set it up. But typically, what I'll do, and I'm not opening up Thinkorswim just yet because it can be sometimes a memory hog when I'm using it with the webinar, but I will in a little bit. But I'll typically have two charts. So I'll have the 1 minute here, so I can see all of the moving average crosses, and then over here I'll put on the daily. And on the daily, that's where I'm looking at the profit zones and my signals and stuff like that too. Is there a link to go from the professional to the elite to get the stats indicator? Yes, there is, Wendell. If you guys want, if I'll talk about that for people that want to upgrade to the live trading or the stats, there's definitely links. I don't know if they've been posted yet, but if not, I'll definitely be posting them in here. Oh, got it. Okay. Oh, thanks, Alexis. Lexi. So, all right, cool. All right, so I get, no, these are good questions. So let's keep going here because we're going to get into some of this. Yes, all good questions, and we are heading down that road. So I'm just going to keep going here. All right, so which cross is the next question? Now, I just had an update from Eric, which is going to change a couple of these slides. Now, Eric, are you comfortable if I install the indicator and show it, or should we test it out a little bit more first? Is that okay? So I'll at least get TOS open here. Head first. So I'll get that open and ready. 593. All right, I'm just letting it open up here. Yeah, and I'll show you real quick. You'd asked the question about the chart. So here's how I do it, because honestly, I really actually don't care about the 1 minute price action. Yet I've still got to look at a 1 minute chart, right, to see everything. So what I'll typically do is do something like this, where I'll have a 1 minute chart so I can see all the EMA crosses, and I'll talk about the multi-squeeze too. That's something I know a lot of you guys have from a class that we did. I think it was our last class in December. But on this 1 minute chart, I actually really don't care. Like, this to me is immaterial. I don't even watch it. But then I'll set up my trading chart, which is typically like a daily. And then you could also put like a 30-minute chart, obviously, as well. But we'll be doing a deep dive into how I'm looking at that and different stuff like that too. Oh, what was Kumar's question? Let me scroll up. Okay, Kumar, on a gap up or gap down on the next day, a lot of time frames change direction all of a sudden. How does one handle that? Okay, let's put this up here too. What about gap downs while in the middle of a trade? buy, hold, cry, stay course. All right, yeah, so that's a good question. Even though the 2-day, 3-day, 4-day timeframes are added, they are not displaying on the chart in the V2 version of TOS. Oh, I don't know. I haven't installed that yet. Is that, Eric, do you want to comment on that, or do you think it's a case of not enough time on the chart? Okay, Eric's on it. Okay, so which cross? Or which, yeah, okay, so we just talked about that. All right, so now we've been talking about EMA crosses, right? But which EMAs? I haven't really talked about like which ones. So, you know, so ones that I've used in the past are the 8 and 34, okay, the 5 and the 21, and then the 5 and the 10. And there's obviously a lot of different combinations here. And obviously I like the 8 and the 21, okay? So I've used these and others as a trigger for the actual cross that I'm looking for. Also keep in mind that crosses also act as signals for many of the algorithms that are out there and black box systems that follow crossovers, so it's good to know when they are happening. So I do know that a lot of black boxes and algos use the 521 EMA. And they use other ones too, but I do know. And since they're looking at them, I kind of like to look at them too, because I know it's like, okay, well, if they're looking at them and they cross, that's going to cause some volume and some different things like that too. It's not overly, I want to emphasize, it's not overly critical which one you use. Okay, especially because we've now got the advantage of multiple time frames to look at. I personally like the 5 and the 21. But there are certainly some time frames that I like in other situations as well. And we will look at that as well too. Yeah, and you know, McDowell, if I said that right, just made a really good observation as well, is that on the when the 8 EMA is greater than the 21, it's indicative of a strong trend. And then when it slips below, it's still an uptrend, but it's not good for long options. And that is a great observation. And that's kind of some of the detail that we'll be kind of diving into as well. And it's actually, you know, once you the better you understand kind of the relationship of price to the moving averages like that, it really does help things come along here. John, so you don't have the profit zone indicator and the multi-cross on the same chart. Well, I actually do, but here's the, and again, we'll kind of get more into this, but since we're talking about it. So if I'm interested on the profit zones on a daily, and by the way, this one's not completely set up. So I'll come over here and just say, all right, edit studies, and then I'll talk about obviously which ones I'm using and stuff like that too. And bullish. And you notice that there's a lot of these, right? So it's like, oh my God, which ones do I use and all that kind of stuff too. So typically what I'm doing here is I'll just say like, okay, you know, if I'm looking at, what was one of the ones, you know, we're looking at Amazon, right? Well, so on Amazon, you know, so I've got to look at a 1-minute chart, right? So I can see all of the crosses. But I honestly don't really care at all about the 1-minute zones. In fact, I don't really watch them on this chart. I just kind of have them on there. So I look at the 1-minute chart for the crosses, and I look at the daily chart for the zones that I'm interested in. And of course, it depends. And if you're taking a signal off of an hourly chart, then you drop it down. So I kind of find I have to look at 2 charts. Does that make sense? So the 1 minute gives me everything I'm looking for. And then the time frame that I'm trading, that gives me the zones that I'm looking for, right? Okay. Okay, so let's dive into this. So which ones do you watch? Which ones have the most impact? So it should be obvious that they will give you different signals. So here is Johnson & Johnson on an hourly chart, okay? Hourly chart and hourly chart. And here we've got the 834 cross. Here we've got the 521, and here we've got the 510. So what I found is that a lot of times the 834 is going to be late, okay? But typically when it goes, it's a real signal, okay? So that's the catch. You know, it's typically going to be late, but when it goes, it's like, man, this is serious. The 510, you'll get a lot of them. I mean, the 5 and 10 can cross all the time. So a lot of times you get too many signals. And then the 521 is kind of a good balance between the two. So if you were looking just at one time frame, then yeah, these do become a little bit more important depending on what you're doing. But since we're able to look at 18 different time frames, it's not quite as critical because we're actually more interested in the roll than the actual cross. All right, we'll kind of get more into that. But it's obvious, you are going to get slightly different readings. So here's Johnson & Johnson. We got the 1 minute chart, okay? And on this chart, we're looking at all the crosses across those different moving averages. So right here, you can see we've got the 510 crosses. Here, we've got the 521. And here, we've got the 8 and 34. So what are the real differences, okay? So the real differences, first in the monthly chart, you can see that this one is crossed lower. This was in the process of crossing lower, and this one's actually positive. Okay, so the monthly chart is actually different on each one. The weekly through the 4 hour, on the other hand, is the same on each one. They're all cross negative. Okay, so the weekly through the 4 hour are the exact same. They're all crossed negative. If we look at the 2 hour, we can see that the 2 hour is positive on the 510. Negative on the 521 and negative on the 834. And if we look at the hourly, it's positive here, oh, negative here. And then if we go 30 minute down to 1 minute, they're positive across the board. So you can see here that even though these moving averages are kind of vastly different, I would say that it's not a huge difference in terms of our ability. Like if you're doing the 521 versus the 510 versus the 834, I don't think it's a huge game changer in terms of your entries and your exits. That's just my observation. And the difference is simply because you have all of them together and you're able to see them roll up and roll down. So if you're not sure, I would just stick to the 521 default. It's solid. It works. I like it. That's typically the one I use the most. There's a couple of situations, especially if I've got a daily signal. I'd say the main exception is that if there is a daily signal that I'm looking at, like a squeeze, then on the 30 and the 60-minute charts, I also want to look at the 510 crosses. So I would say that that's the main exception because those crosses, if it's going to go, those are going to give me a heads up a little bit faster, and I'll document that. And we'll talk about that. You guys might be seeing something called V2 that Eric's talking about, and I'll talk about what that is here too. So the other part of this is that also what I've found is that the specific setups that I like, the moving averages are kind of easy to follow. Like this is a trade I would never do. So, here we are, first of all, there's not a signal. Okay. There's not a squeeze or anything like that. It's kind of blah. And I always like to say, like, look, okay, and part of what we'll be doing today too is we're going to be looking for trades for next week. So if you could only do 3 trades next week, would one of those be like, say, buying calls or buying puts in Johnson & Johnson? And I would argue that if we go through and we look at 100 different setups, that Johnson & Johnson ain't going to make the cut. So keep in mind that, when you are doing a setup, you do want to have clear guidelines as to what you're looking for. All right. And then you want to spend the time looking for the kind of the best representation of that. And to me, this is not really a setup that I would trade in any way, shape, or form. And what I found is that the sloppy setups tend to also have, their moving averages are kind of sloppy. Okay. Well, what do I mean by that? Well, if we go back and we look at the moving averages here, look at this. You've got, some are down, some are up, what's going on here. It's kind of not really clean, right? So we'll talk more about that, but I'm a big believer that it's like, I don't get married to a stock. Like I'm not like, oh my God, I can only trade Tesla. I get married to a specific moment in time that I'm looking for. And it might be against Carolyn's level. It might be a squeeze. It's kind of a handful of things like that, and that's what I'm interested in. And if it turns out that Facebook happens to be in one of those situations, I love that because I love trading a stock like Facebook or Tesla or Amazon. But if those stocks are not in the setup, then I move on and trade something else. All right. Okay. So Johnson & Johnson at the end of the day is a messy chart. And then, and even though it's messy, the moving averages across all of those, the 521, the 510, the 834, they're close enough, and they don't, in my opinion, make much of a P&L difference in results. Okay, so the bottom line is pick the one you want. If you aren't sure, use the default 521. Now, the whole key to this tool is that since you are able to watch multiple time frames roll, and we're going to start talking about what that rolling process looks like here next. This is something that's unique in the trading world. I've never seen a tool like this. The actual cross values become less important than if you were just watching one chart. Okay, so the nature of this indicator is thus our ability to see the roll happen versus looking for one cross on one time frame. And Dan, let me highlight your question too, because we'll take a look at that. So what I found is now we're going back and we're looking at the, same thing here. Here's the 510, here's the 521, here's the 834. If a stock is uptrending, as Facebook is uptrending, guess what? They're going to be green. Okay. So, but what we're interested in, of course, is those turns. So right now, Facebook is thrusting higher, and since it's thrusting higher, everything's green. So either you're already in this trade and you're looking when to get out, okay, or maybe you're looking to sell some call credit spreads against a level, and then you're going to start looking for turns. But the main point here is that, when you are in the trade and in the middle of a thrust, everything is green in this case, and that's how it should be. And here's Facebook, of course. So Facebook here has been, as we talked about, toward the beginning, it's thrusting higher, making higher highs and higher lows, right? And so all this is right now is just one of those thrusts. So default. For me, the 521 cross is a solid default, especially if I'm able to watch multiple time frames as we are with Eric's new multi-cross tool. Now, if I am watching a daily setup for an entry, I do like to watch the 5 and 10 EMA crosses on the 30 and 60-minute charts to get me into the trade. The 5 and 21s will actually do just fine as well, because remember, and now this was before this tool, by the way, but since now I can watch them roll higher, and we're going to look at some examples of rolling, that actually, even with the 521, I can sit there and say, okay, well, the 15 is crossed, and the 30's looking like it's about to go. I can get in a little early, that kind of stuff. It's this rolling factor that's the difference maker. And so we want to spend some time now talking about the roll. So bottom line here is don't spend too much time tinkering with this and trying to find the best cross ever. The ability to watch multiple time frames at once eliminates that need. All right. It eliminates it. So, my point here is that it's sometimes it's easy to go down the rabbit hole and say, well, I'm going to try the 4 and 19, I'm going to try the 3 and 18, and I'm going to spend all weekend, huddled away from my family working on the 832. And what I'm saying, at least what I've noticed with this in my experience, is because you have the ability to watch multiple time frames, it's not critical. So again, if you're not sure, the 5 and 21 is fine. If you've got other ones, you're like, John, I've always used this. Great, use that. But don't. That's not the rabbit hole to go down, is what I'm trying to say there. Now, this is old. This was current as of last night, but Eric and I think Sam in the room found this and was able to fix it. So originally I was going to say you can change the settings in Thinkorswim, but with the way TOS was working, the first time you use it, it gets hard-coded into its memory. So you can't change the settings. So you have to set up, a new indicator in there. Well, I now believe that it's set up with version 2 that you can't. Well, you know what? Here, let's try this. Let's try this live. So no pressure. I will grab a chart, detach. And let's get rid of active trader here. And let's see, I don't really want all that either. All right, so what I need to do here, well, this will actually be good. Let's see, so on something like this, so I'm just going to remove all studies. Okay, so now I've got my blank slate here, and then I'm going to change it to a 1 minute chart, since that's the one I want for the tools here. And then I've got this, I've probably got this in my download folder, so I need to put it into my documents folder. And then I'll show you real quick just how I set it up, with all the multiple indicators or the multiple tools and stuff like that too. And then Eric, this is great because if I'm doing something, if I screw something up, then I can ask you. Dun dun dun. And then for people that want to get version 2, Eric, what do they do? Is it posted in the room? And okay, let's get this here. Come on, come on, come on. It's going through all my downloads here. Yeah, so what I'm doing, this is what I do, and I always do things kind of slow. So I downloaded it, so now it's in my downloads folder. My downloads folder, I need to clean it out. It's so big. So if I sort by date, gosh, now I just got to find it. Okay, so then I'm just going to drop it into my documents folder, okay? So first, let me just download this. Multi-cross V2. All right, so there it goes. And then I'm just going to drop that into my documents folder. All right, so then when it's into my documents folder, I could come over here and just go studies, edit studies, import, and then I need to find ST multi-cross. I need to clean this out too. Version 2, I can hit open, and then ST multi-cross version 2. Now, what I do is I add this 18 times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 to get all of the time frames that I want. But now in this case, I also want to add 2 more versions, or 1 more version of the 30 and 1 more version of the 60-minute chart. So 1, 2. All right. And so now I can come over here and say, okay, so this first one is going to be monthly. Okay. The next one is going to be weekly. Okay. The next one here, let's do 4-day. And of course, it's a pain to set this up the first time. And then you can do this obviously in TradeStation too. But then once you set it up, just save it. And then you can just load that style the next time. So you're good to go. And what am I at? 3 days. Did I already do that one? So month, week, 4, 3, 3. I did that twice. So 2 days. And then daily is already there. And then I got the 4 hour. And then the 2 hour. And then now is where this is going to get interesting. Because on the hourly, I also want the 510. So I'm going to do hourly 521. All right. But then I also want to see the hourly 510. So I want to make this one also 1 hour and then 510. All right. So now I got hour 521, hour 510. And then I'm going to go half hour 521. And then half hour 510. I mean, I'm super excited about this. This just solves all of the world's problems. All right, so now I got hour 521, hour 510, 30-minute 521, and that's all I need there. So then I'm just going to go down the rest of them as the 21s, 521. So I got the 20-minute, and the 15-minute. The 10-minute, 5-minute. And these are about the times when I'm like, you know what? It'd be amazing to have a trading assistant. 4-minute. Yeah, I'll show you when it boots up here in a second. All right, so I got 3-minute and then 2-minute. And 1 minute. All right, so now let me just review real quick. So I got monthly 521, weekly 4-day, 3-day, 2-day, daily 4-hour, 2-hour, hour. And then I got hour 510. And then 30-minute 521, 30-minute 510. And then 20, 15, 10, 5, 4, 3, 2, 1. All right, okay. Now let's see what happens here. So yeah, cool. So what happens here, and let's go back to Johnson & Johnson because we knew that one was crossing different. So I think I did this right, Eric. So now you can see that you have, now, so the only thing about version 2 is it's a little bulkier because you're seeing the cross here. So 521, 521, 521, 521, and then you can see there's the 510, all right? And then there's the 510. So if you think you're going to use 521, I'd use the original version if you don't want it to be this stretched across the screen. So, and what I mean by that is like, so with the 521, so you can see here, the original one, it just kind of, it keeps it pretty, it's just the 521. And then Eric, what was the symbol that you looked at where you saw some of them were different? I was going to try to find one where the 60, let's see, was different on a different time frame. Costco. Make sure that I've got it lined up here right. And, okay, perfect. Yeah. So what you can see here is that on the 30-minute chart here. So you can see that you've got the 521 has already crossed, and then the 510 is in the process of crossing. So in this case, what I would use this for is on a daily chart. I'm looking for that 510 to cross first, right? Because it's going to be faster. So anyway, that's cool. That's an awesome addition there. And so let me save this one now. So then I can go over here and go style, save style, and I'm going to call it EMA. Oh man, EMA multi-cross with 5, 10, 30 minute, and 60 minute. That's a nice clean name. Name is too long. Okay, screw you. 30 and 60. So then always, of course, click that or you're screwed. Okay, we'll come back to this, but that's a cool addition. All right, so good work, guys, kind of finding that and getting it going there. All right. So again, I want to emphasize here that it's easy for us to kind of go down, this, kind of getting a little too, it's easy to get into the weeds and stuff. But what I want to do now is, first of all, Eric, that's awesome that that's available now. That is kind of a nice little feature in terms of, especially some of those time frames where you're looking for those faster ones. And you can absolutely make 3 different charts too. Remember, part of this is also trying to create something for easy decision making. And so as we get through this, that's what we're going to talk about is how do you combine all this stuff to make easy decisions, all right? All right. So the role. We're going to talk about the role. Yeah, it's easy to get in the weeds, right? So at the end of this, and we do take a kind of a deep dive here on purpose so that when we come out of it, you'll see how easy this is if you want to keep it easy, if you're determined to keep it easy. So let's talk about the roll, which is really the most important part of this. So so primarily I use the roll for entries against key levels. Okay, I don't use the roll so much for exits, although I do in some situations. Okay, so it is fine for exits, but as you guys probably have guessed, it's the dynamic profit zones that I'm going to be using more for exits. However, there are some situations where I am playing the rolls, both in and out. So one example is on the indexes, like say for the E-mini futures, I like to use what's called the point of control, which is something that's part of Thinkorswim, and I think it's in TradeStation too. The short version of this is that it highlights where the most volume is taking place for the day, and the way I've got it set up also for the week. Price is attracted back to this level as the algos and funds probe for liquidity. All right, well, that's all a mouthful. What do I mean by that? So if you look at this chart, this is the E-mini S&Ps. This line up here is the weekly point of control. That's where the most volume is traded for the week. And then for a particular day you're on, you can see where the most volume is traded there. And the S&Ps especially go back and forth between the weekly point of control and especially the daily point of control. So if we get too far away from the daily point of control, guess what? I'm looking for the moving averages to turn and start advancing back to the point of control. Okay? So in a situation like that, what we're really looking for are the rolls. Okay, and that's what we want to talk about is the rolls. VWAP is something that's a little different. And for those of you that don't have this, I can show you real quick, and I can give you a copy of it here. So this is what it looks like. And in studies here in Thinkorswim, it is volume profile. So I just have volume profile in there twice, daily and weekly. But I'll share this with you guys here. So share grid, share. Point of control. So there it is there. And then I'll also put it in the slide. So if you have Thinkorswim, you can just dump that in there here. Insert. And in part of our live trading, we'll be using, we'll look at that too. So that's the link there on the slide. So the point of control is just it's what I call, it's part of levels. So what are levels? So levels are like point of control. If you like Fibonacci's are fine. CB, that's Carolyn Broden, her fib clusters, pivot points, voodoo lines, support and resistance. It doesn't really matter. The concept of levels is that you've just got something where, here's resistance. This is where price is going to make a decision. Okay. And then the moving average rolls kind of help you see, what it's doing there. So for levels-based trades, what the main point here is that let's say that we're falling down, the price is coming down, and here's a level. Okay, that might be it could be a lot of different things. It could be a 50% retracement fib line. Okay, it could be R2 on the pivots. It could be, a voodoo line. It could be a point of control. It doesn't matter. What we want to know is that when it gets here, is it safe to buy, okay, or is it going to blow right through it? Because we've all seen it when sometimes we come down to a level and the market acts like it's not even there. I hate those situations. I would rather have a little bit of confidence that the market is about to turn. But as we've already seen, that if by the time we get a trigger that's confirmed it's always too late. So how do we do that? How do we kind of time that? So now I want to study the roll. So here's the NASDAQ futures. On this particular day, it was coming down to, this is the point of control for the NASDAQ futures on this particular day. You can see here the markets, we open up, we're at 68.20, and we're just selling, we're selling. And by the time we get down here, it's down almost 40 points. So do we blindly buy it down here and hope for the best, or do we want to see some kind of proof here that something is happening? Okay, so for me, this is an example where I'm like, all right, this is a day trade. I'm fine with a 1 minute, you get a 1 minute cross, and you can see the 1 minute cross there. Now, am I catching the dead lows? No. But if we were going to be using, like, say, a 30-minute chart, that's not going to cross until we're like up here. So we're going to miss the entire move. Okay. So now if you watch this roll here, watch the next frame. Boom. Let's try that again. Boom. Boom. Now the 2 minute crosses. So you can see that the 1 minute is now green, meaning that, the bar is closed and the cross is confirmed. And then you've got this. And Eric, when it's yellow like that, is it just for that bar or is it for 3 bars? I couldn't remember there, but I know it's crossing during that time. And that's really what I was interested in and what I was looking at. I was like, oh, okay, cool. On the 2 minute chart, it is crossing, right now. It's like, great, right? So then if you watch this, boom, then the 3 minute goes. That's what a roll looks like. Then the 4 minute goes. Then the 5 minute goes. Okay. So if we do this real quick, imagine this. It's like there's the 1. Okay. So 1, 2, 3, 4, 5. Okay. You can see it roll. Now watch price. So I'm going to do it again. This time watch price. So here's price. 1, 2, 3, 4, 5. Okay, so that's the idea here, is that you're watching it roll up. Okay, and then of course on a downtrend, you're watching it roll down. And this is why, of course, we want to do the live trading, because it's nice doing this in a real-time environment. Now, the nice thing about this is, guess what? If you're doing a day trade like this and you get a 1 minute roll, your stop is right here. So your stop is pretty tight. You don't have to sit there and say, okay, I'm gonna risk 40 NASDAQ points for this. And so if you look at that and say, okay, if it doesn't work, you don't lose very much. But if it does, it's a nice good move like that. So a lot of times in a situation like this, you're risking 1 to potentially make 3, 4, 5, 6 times your risk, because it's one of those rare instances where you can use a pretty tight stop. Because actually most of the time I'm not a fan of tight stops. Tight stops just kind of, you get caught up in the noise. But on something like this, especially if you've got a key level there, right, and you got that first cross, that's the first sign that it's going, you can get in for a small amount of risk. All right. John, wouldn't you have gotten that same signal 4 bars previously? Well, see, 4 bars previously, there's not a cross. Is that what you're saying? So here's the cross right there. These are those zones which shouldn't be on there, honestly. Now, and by the way, you never trade the crosses during lunch, because during lunch, nothing happens. So there's specific times of the day, the open, like the 10:30 European close, and then like the last 30 minutes. So if you're day trading, there's periods of time when you just, that's why, and then typically you're not hitting any levels during the chop either. 5 bars before the reversal was green too. So 1, 2, 3, 4, 5. Right there, the bar's green, right? But the cross, there's no cross. Is that what you mean? Sorry, I may not be understanding your question. So, but the idea here is that, again, you've got the level, okay? And then we cross. So we've got, here's the level. We're waiting for a signal. We get in the signal. And again, you might be getting in here. You might be getting here. You might be getting here. Remember, this is just the snapshot of when I took it, right? Your stop is here. And then to stay in it, you're looking for rolling up. Now it rolls to the 2. Now it rolls to the 3. Now it rolls to the 4. And now it rolls to the 5. Okay? Yeah, and ignore these. These are the profit zones. So all we're looking at here is the pink line and the white line. So that's the 5-period moving average, and that's the 21-period moving average, and that's what's being depicted up here. Yeah, so you took some heat here, right? But yeah, you don't get stopped out. So there's your initial cross right here. Your stop's down here. And guess what? The market's going to do what the market's going to do. It's sitting here, and you can see like the 1 minute kind of crosses, but that during that time, the 3 and the 4 are fine, right? That's normal. It's like, okay, do. What you're seeing, like this is going to go back and forth all the time, but what you're looking for is that stair stepping of these larger time frames crossing. All right. So again, I want to just to reiterate this. Here's the main point of this whole slide right here, is that because this is what we're going to be doing during the live trading. And it's different. When you're doing a day trade versus a swing trade, you have to be more precise. All right. So we're coming down to a level. All right. Here's the level. And again, honestly, I should have done this without these lines on here. Those are the profit zones that have absolutely nothing to do with this chart. Okay. So all we're looking at here is the pink line and the white line. So we're waiting for it to cross. Okay. Now again, this is just a snapshot of when I happen to take the screenshot. I'm like, okay, it's crossing. So you get in here around there. This is your stop loss. Okay. So you're either going to get stopped out, right? Or this thing is going to roll higher into a target zone. So you're sitting there going like, all right, here we are at 67.99. What do I do? All right. So on the next slide, we're up 5 more points. Our stop loss is right here. And the next one's crossed. It's like, okay, so far, so good. So we're at 68.04. On the next slide, we're at 68.09. So now we got 10 points of profit, right? Our stop loss is still here. All right, so where do we get out? And we'll talk about targets and things like that. But what we're doing is like, are we rolling higher here? Boom, 4 minute, great. Now we're at 68.15. Okay, so that's kind of what you want to see. And the important thing to keep in mind here is that, and I can't emphasize this enough, is that the reason we're buying a move down, why are we buying in the situation? Why are we interested in buying a move to support there as opposed to finding a level to short? Why do you think? Any guesses? The reason is that when you look at the higher time frames, what are they telling you? Is this market bullish or bearish? If you look at the 30-minute chart, the 60-minute chart, the 2-hour, the 4-hour, the daily, the 2-day, the 3-day, the 4-day, the weekly, and the monthly, is this a bullish chart or bearish? Right, that's bullish. Every time frame, 30 minutes and above, is crossed higher, right? So if we're sitting here and we're going like, there's a sell-off here, and gosh, the 20-minute through the 1-minute chart are all negative. Is this a time to panic? Okay, and we're coming down to some support level here, and like voodoo line, it's a point of control. I mean, 30-minute and above, the moving averages are all crossed higher. We got a little bit of selling right here. Do we panic, or do we wait to see if we're going to roll back in the direction of that? Remember when we were talking about the thrusts and reactions? On the larger time frames, the NASDAQ is thrusting higher. On the smaller time frames, it's having a reaction, okay? So what we want to do is we want to time the reaction, the small reaction, to get back in alignment with the larger thrust higher. So when we find a level that we like, this could be a pivot point, this could be point of control. That's a Fibonacci 1618 extension. There's a lot of them that are there. But the main point is you're waiting for the first roll. When you get the first roll, now you've got your risk in place. You get long with the idea that we're going to roll back in the direction of the larger thrust. And then we can watch this and say, man, are we going to get stopped out? 2-minute roll, great. 3-minute, that's looking better. 4-minute, yada, yada, yada. Now, ideally, what happens is that all of these roll back to positive, and then you just trail your stop throughout the day, and you just catch a hell of a move. All right. But obviously, too, and part of the trade management strategy, and we'll do this during the live trading, is that there is a methodology that, in this case, once you take out the swing high, what you do is you trail your stop from here to here. Okay. And then once you consolidate here, if you have another thrust, then you're going to trail your stop from here to here. And then again, remember those thrusts and reactions we talked about. Then you're actually managing the trade based on those thrusts and reactions. But the main point here, does everybody understand this? The main point here is that you're catching a roll in the direction of the larger term, what's going on there. Yep, cool, okay. Yeah. So guess what? Yeah. So guess what? The 1 minute, right? When the 1 minute crosses here, time has to pass for the 2 minute, right? And then more time is going to pass for the 3 minutes. So you're holding on to this thing as it rolls. So yeah, so this is time. It takes time for this to unfold. They don't cross at the same time. So the 1 minute crosses here, and then like the 2 minutes going to cross, and then the 3 minutes going to cross, and that's the whole rolling of the time frames. Yep. Okay. Cool. Again, if everything is green, what is the trade? Well, you're not. There isn't a trade. You missed it. So you're waiting for those levels to get hit. Now, if everything, okay, so, and we'll talk about, so if everything's green, so let's look at, okay, so Google. So Google was a trade that we did. Now, unfortunately, when I bring this up, it's only going to bring up what it looks like right now, okay? So when we got into Google, what happened is that it was all green, okay, and this thing was exploding, but then during the afternoon, it got choppy, and then the 1 minute through like 10 minute went red because it started to retrace. And then once the 1 minute turned positive again, that's when I bought those calls, right? So that's how you get back in alignment with those. But if they're all green and taken off, you missed it. So now you got to wait for the next pause and stuff like that. So what I like about this too is this tool instills discipline. If you're looking at something like everything's green, it's like, well, it's already taken off. So where are you in that cycle, right? Remember the emotional cycle that we talked about? Well, we're probably right here if they're all green. So, you want to wait for the next kind of roll there. Excellent. Okay. So let's keep going through here. And we're going to start we'll dive into a lot of examples here. I just want to make sure you understand the role. Now, I talk about one of the things that I really like are the daily charts, right? So here's a daily squeeze. This is one of my favorite signals. If you don't know what it is, when I finish up, I'll spend some extra time with you guys. If you're newer to the concept of the squeeze, we'll spend some time and go through that. It's a free indicator on Thinkorswim. I use it on almost every time frame. So when I'm looking at a squeeze here, I'm sitting there going like, okay, great. You can see that the daily is crossing here, right? But keep in mind that I'd also already seen, the 30-minute and the 1 hour cross positive. So I'm like, man, this is great. Let's buy some calls. And I love it when the spiders or the Qs have a squeeze because it's essentially saying it's going to release some energy. And if it's crossing positive, the odds are very, very high that's going to release energy to the upside. So guess what? If the spiders and the Qs have a squeeze and they're going to go up, most stocks are going to go up with it. In this case, you can see that the spiders jumped up 7 points in 4 days, which is 70 points on the S&P futures. That's a big move, okay? So that's what I'm talking about. So this is my favorite setups typically are something when you see something on a daily chart like this, because a 7-point move, now that means you've got to have the cojones, and that's whatever the equivalent is for the female as well. But you got to have that it's courage, it's the willingness to quell your anxiety to hold on for a trade for a move like that, because it's easy to get excited and say, oh my God, I made 50 cents on the spiders. 7 points is a big deal. That's a situation where, you're buying options at 2 and you're selling them at 6. Okay. That's a triple. That's a big deal. So that's what I'm interested in. I'm not interested in buying options at 2 and selling them at 230. Like that's a setup that doesn't interest me. But I am interested in setups that could potentially do that. Intestinal fortitude. Yes. Thank you. That applies to everybody. Could you use this for Allison's intraday trades covering risk? Yeah, absolutely. Now, the best person to answer that question will be Allison, and she is going to help out a little bit for the live trading as well, and can certainly jump in and answer questions like that too. Okay, cool. All right, I think we're going here. So does that make sense? So the whole concept of the roll here, now all we're doing is just saying, you know what, right now I'm looking at a daily chart, okay? I'm looking at the squeeze. But in this case, so we spent some time talking about, the 1 minute chart and the 2 minute chart and the 3 minute chart, right? In this situation, I don't care what they're doing. Okay. I just don't care. So somebody was asking earlier, it's like, okay, I've got this daily thing going on and there's a squeeze. What happens if the 1 minute rolls over? Who cares? The daily chart, the ones that I'm interested in are like the 30-minute and the 60-minute. The 1 minute and the 2 minute and the 3 minute are noise. However, if I'm doing a day trade, like I was just talking about in that NASDAQ futures trade, then yeah, I do want to use the 1 and the 2 minute. So it's critical to establish, like, okay, I'm taking a signal off of a daily chart. What's important to me? Now, I may watch and say, oh, the 1 and the 2 and the 3 minutes crossing. Maybe that's going to lead all the way up to the 30-minute crossing. Maybe not. But it doesn't matter because these are immaterial to what's happening on the daily chart. Remember, the thrust and all that stuff on a 1 minute chart is immaterial to what's happening, the bigger thrusts that are happening on the daily chart. So the main thing here is you just want to understand and just be sure you're looking at kind of like, the right crosses for the time frame that you're trading. If you're trading a daily chart, don't get caught up in the noise of a 1 and a 2 minute chart crossing. It's literally immaterial. If you're trading a 10-minute chart or a 5-minute chart, yeah, the 1 and the 2 minute charts are actually really good heads up as to what's going on. Does that make sense? So just 1 minute cross is only important, based on the time frame you're trading. Oh, let's see. Oh, yeah, let's look at Goldman Sachs. Yeah, so without even looking at the daily chart, this is, this to me is a stock where it's like there's here's a stock that's got a little confusion. It's like, okay, the monthly chart is bullish, the weekly through the 2 hour is bearish, the 60 and the 10. Well, actually, no, I think if I'm reading you correctly, is that here you've got, and I'm not even looking at the daily chart. I just have to look at this and say, okay, the larger trend is down. Okay, it's having a little, it's a little bit of a pause higher here, and now the shorter term time frames are starting to turn down with the idea that that's going to roll these down, and now we're going to resume our downtrend. Okay, so that being said, let's look at a daily chart on this and see what that looks like. 1 day. Yeah, so I look at this and say, yeah, it's time, it's time to short this pig. But you can tell that just by looking at the moving averages and just saying, does that make sense? So, the larger time frame is down. It's, it's having a dead cat bounce, and now it's starting to roll back over again. And the idea here is that these would roll and then back to matching the larger time frame. Sean, okay, so what if the 1 minute turns green, then red before the 2 minute turns green? That's when you just have your stop in place. So if we go back to this example on the NASDAQ, right? So the 1 minute turns positive and you place your stop. Now, if you notice here, watch this. Oops. Before the 2 minute turns, you can see that the 1 minute actually goes negative. Okay, but does it stop you out? No. So you just have your stop in place. The 1 minute turning is the first sign that things are starting to roll, but it's going to be, flopping back and forth here like a carp. Now, if you want to be a little safer, wait for the 1 minute and the 2 minute. And again, I got to emphasize, this is if you're like scalping futures. So I'm very rarely looking at 1 and 2 minute time frames. I just liked it because I could find an example to show you of a roll. And so obviously it's going to be easier to say, oh, look at the 1 and the 2 and the 3 and the 4, than, oh, there goes the 2 hour, there goes the, the 2 day, because that's going to happen over the course of, days and weeks and stuff like that too. Okay, so now where were we here? Okay, so now as we're looking at this, we can say, okay, so here, these were some trades that we did in the room last week. So we had, we came down to a level here, and then the 1 minute crossed, we went long, and it was like, great, there goes the 2, the 3, and the 4, and the 5. And the only reason we got out is because the market closed. It's like, okay, here's the close. But that's exactly what you want to see, is the roll higher, okay? That roll higher, and that starts against a support level like that. In this trade in Facebook, it was the same thing. Off of the daily chart, we're sitting down there and we see some support, and then as we start to roll, okay, back in alignment with these higher time frames, we take some positions. Now you can see here that I started off with 50 contracts, and here we're at $6 and they're at $8. I've got a good profit, but I actually continued to hold on. I still have some of that position left. And I think one of the things that's important to realize, so here's the rest of this position, is that, I'm a big fan of scaling out. If you'll notice here, let me squish this down a little bit. Now, had I held onto all 50 contracts, my options now are up 100%. So had I held on to all 50 contracts, I'd be up a lot more money. But, the further away you start going away from your entry, the more risk you're taking on too. So I'm a big fan of just kind of scaling out. Now, this put credit spread, which I sold for $1.40, you can see right now is at 12 cents. So that's pretty much at the maximum amount of profit. But we'll talk about, how do you manage these things? And I am a big fan of scaling out. Take some money off at your first profit band and then just, roll it up. And on Amazon, this was another one where the same thing. We had some support, and we're watching to see, is Amazon going to hold the support, right? And we could see immediately that Amazon is bullish, okay? When we did this trade, the crosses were green. They were positive on the monthly, weekly, 4-day, 3-day, 2-day, 4-day, 4-hour, and 60. But then everything down here was red. So all we did was, it's like, okay, great. Now the 3 and the 4 minute and the 5 minute are positive. And now here goes the 10 minute. Great, because this is a little bit bigger trade. I'm not trying to scalp it. I want to see like the 1 minute through the 10 minute go positive. And then great, we bought some options. And it's like, cool, here go the rest of them. And in this case, and if you're not familiar with options, don't worry. Essentially buying a call is making a bet that it's going to go higher. And if you're selling puts, that's a safer way to do it. That's the easiest way to think of it. So these are all bullish plays that benefit from this roll continuing to happen. And so then, the next question is, and it's almost time for a break again, which is good, is what if the roll fails? So if you're watching a market get to a level and the 1 minute turns, and so you get in and the market rolls over and dies and takes out the lows, do you add more or do you get out? So again, this goes back to the time frame that you're trading. So as we looked at on those NASDAQ futures, that was a day trade. We're just looking to get try to get 15 or 20 points. So in that case, if it takes out the lows, that's a stop loss. But and it's great. It's a small loss. Re-entry is only a commission away. A big lesson and stuff like this, and this is probably one of the hardest things for traders to remember, is don't get trapped by the need to be right and the need and confirmation bias. And if you're not sure what confirmation bias is that it's a human. We're hardwired for this. Is that if we make a decision, and so there's a couple of psychological studies on this, but one of them is they did this at a horse track. And what would happen is there's 10 horses or however many horses there are before the race. And, before the race, everybody who's placing bets, they know that look, who knows what horse is going to win. But when they place their bet, they suddenly, they're feeling that this is the horse that's going to win increases substantially. Well, that's confirmation bias, because as a human being, when we make a decision, we need to actually justify that was a good decision. Okay, if you're not aware of that, that can cause a lot of problems in trading. Because remember, in trading, all we're doing is playing a probability. So re-entry is only a commission away. So what I am a big fan of, though, and again, remember, for that day trade, it's like, okay, we get the 1 minute cross. This is a level. Great, I'm buying it here, and there's my stop loss, and that's it. That's pretty easy. However, for some of these larger trades, like on a daily chart, I don't care about the 1 minute and the 2 minute and the 3 minute crosses. Okay. So if it's a stock that you like, on the daily charts, it's on top of a major level, there's a squeeze. My main advice here is to spread the love, and that is to scale in. Okay. There's never going to be a perfect entry. So determine your total size in advance. So let's say it's 10 options, all right? So you're sitting there and okay, the 30 minute finally goes positive, so you buy 2 calls, okay? Now maybe the next day it goes negative. Does that mean you get out? No. You're still waiting for that daily signal, which is building up to release pressure, okay? So then the next day, 2 days later, the 30 minute goes positive again, you buy 2 more calls. And then the 60 minute goes positive. Great, buy 2 more calls, okay? Does that make sense? So you're just scaling in because you're waiting for the signal on the daily chart to unfold. And as you're doing this, you're obviously going to have your, part of the trading plan is like, okay, here's my max risk, and we'll talk about stop losses and things like that too. Yeah, well, and yeah, confirmation bias in the news is kind of fascinating, because what happens is that then people only seek out news that confirms their beliefs. So, which is, and the advertisers know this, and so they deliberately make headlines to capture that. So, if you have one point of view that you really believe in, then you're only going to look for the headlines that confirm that point of view, right? It's a pretty fascinating thing, and unfortunately, it has been proven. The media, Facebook, all that, essentially manipulate people because of that. And so it's really good just to be aware of that, not get too caught up in, any of the stories that are going on that seem sensational. They are deliberately following something to, get you to click, which, it's advertising dollars is all it is. So it's just something to be aware of. And in trading, it can cost you money. Okay. So let me see where we are here, because I think it's a good time for a break. Yeah, okay, great. So we talked about that. Exits. Okay, so we're gonna roll into the profit zones here, but let's go ahead and take another break. Dun, 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 dun. Quick break. Back at 2. So another 12-minute break. 2:55 Central. Yeah, hardwiring for sure. All right, guys, let's take a break, and then now we're going to get into the fun part. We're going to talk about profit zones, and then we're going to start looking at chart setups for next week as well. All right, back in 12 minutes.